Nick Santiago, my trading warrior brother, welcome back to F.A.C.E. I'm making you the presenter. Nick is from In the Money Stocks, and there have been plenty of stocks in the money. Stick around, he's a GANist. At least he utilizes some GAN philosophy for his ideas. Hi, Nick.
Hey, Dale, how are you?
Are you good, buddy? Gosh, how long has it been, Nick?
It's been a while. It's been a little while. I'm not sure exactly how long, but it's been a little bit.
Okay, so I do remember, Nick, and it's always eye-opening for me to talk to you and get your general views on the market. Last time you were here, you were very constructive and right about the market. I think it was transports at the time. People are amazed how I remember things, other people's trades. Forget where my orders are, but I remember everyone else's. So what's on your radar, buddy? And I'm wondering if there's any GAN stuff. I know you pay attention to not just price, but time. So take it away. What's on your radar right here with S&Ps?
So time is more important than price. That's what GAN always told us. And I think we're about to run out of time. So I know these markets have been moving higher, and I've been predicting and riding them up. But at this time, I'm starting to jump off the ship, and everybody is now on the bull train, and I'm about to get on the bear train. So when we get into
what's it going to take? What are going to be the triggers for you? And do you think, first of all, Nick, the magnitude of the recovery from the low late December, January without a pullback, that was pretty unusual. And, you know, I tried to start getting short at 78.6, 61.8, and here we are at new highs. Actually, on the weekly, it looks like a 3-drive formation to me. So it even looks like a 3-drive with what you have up there. So what's going to be your trigger for knowing that we have peaked?
Yeah, so very, very often when you get moves like this and they start to, they get what we call runaway moves. You get breakaway moves. Sometimes the old saying is the best moves come at the end of moves. And, you want to see that ultimate euphoria, and we're getting it now. You have Apple earnings today after the reported Apple's trading up. Everybody's getting, wow, the market can't go down. The Fed today is going to come out with their statement. Most likely they'll be dovish. Many people are thinking now a rate cut is in the works, and I think there is also, but I think there'll be a rate cut coming in September, not coming right away now. I think the Fed funds rate will get we'll see a cut probably in September or so, once the market gets jittery again. Right now, the Fed really can't cut the Fed funds rate with the market going up. But here's how we're going to isolate a top. You're going to look
but before you go, though, Peter Bookfar says the Fed is not data dependent. They're S&P dependent. So why would they use their ammo up here anyway? They may need it.
Right. Exactly. I agree 100%. It doesn't make any sense to do that. But what I think will happen now, when we get into sell in May and go away, and we start to see the market tumble, they'll come under more scrutiny, and they'll have to eventually cut rates. I think I'm going to go out on a limb here and say September, look for a rate cut. Probably.
Well, yields look like they're pricing it in. I mean, 10 years look like they're going to take out 235, maybe head towards 210 or so, right? You see it that way?
Absolutely. In fact, look at my line here. I already got it going down to 2%. So once we take out this weekly chart, 200 period moving average, that's where the bounce occurred in yields on the 10-year. Once we take that out, 2% should be free fall. And once we get down there, they're behind the curve. They got to cut. They might even cut by 50 basis points. I don't see a 100 basis point cut, but I do think a quarter and then potentially another quarter, and then you get another rally. I mean, let's face it, the rallies only exist because of liquidity, and that's the injection in the arm that they need to go higher. But going back to your prior question, as far as what would give us a top in this market, do you see what we did here on March 22nd? I don't know if everybody can see where my cursor is. We had 122 million shares traded in the spiders on a reversal day, but right here, right on March 22nd. So we had a Fed announcement on the 21st, which happened to be the spring equinox. Markets moved up. Then we sold off the next day with very good volume and never had any follow through, and recaptured trend and kept going higher. So now when you see a day like that March 22nd session on high volume, and we get a follow through day, you know the top is in, and then ride this thing out for multiple months. I don't think we're going to get a quick recovery. I don't know the catalyst. Honestly, I never know the catalyst. I just look at the charts and I try to frame it up with the time patterns that I've isolated through mathematics. So
what do you think about this for a black swan? You know, for years, and I know, you know, you look at planets and you talk about equinoxes, you know, for eons, everyone thought if there was going to be another major conflict, it would be, everyone was looking towards the Middle East, right, Nick?
correct.
How ironic would it be with the way things are lined up in Venezuela, with Russia and China having boots on the ground and we're on the other side, that becomes a flashpoint? No one thinks it will. What do you think?
Oh, I think it's very close to happening. I think that's might even be more of a scenario than the Middle East. We've been in the Middle East now forever. So
well, that's what I mean.
Yeah, I agree. I agree 100%. In fact, I told that to my members last night. I said, you know, everybody's asking me for the catalyst, and I said, I don't really know what the catalyst. I'm usually surprised by the catalyst myself, but that certainly could be. I mean, right now it might even be on the top of the list.
I have a question from one of our attendees. He's saying, "Hey Dale, can you ask Nick if he's bearish all equities?" And I'm assuming Garcia that you were asking, or just the U.S. So with that, is this going to be an across the board global equity sell-off, or
across the board?
I know it's going to be different in magnitude, but what do you think?
I think it'll be across the board. I don't think anything gets spared today. I think every market is intertwined by something now. So you know you'll see that right now the S&P got it. You know, it has been the leader. But emerging markets, they're going to come under problem. They're going to see problems. It doesn't really matter. Europe's an absolute disaster. That's going to be problematic as well. So
can I imply from that Nick, you think that when this happens, there'll be a bid in the dollar?
Absolutely. There already has been, right? I mean, the dollar has been super strong. In fact, when we, you know, look at a chart of the dollar versus the euro, which is the most heavily weighted equity against the dollar. I mean, you could just look at the trend here. I mean, you got a nice little counter trend bounce, but it just continues to go lower. So, you know, the euro might make it up to around 113, maybe 113 and a quarter, and then it's headed back downtown. And that's definitely. I've been a dollar bull. If you remember the last time I was on, I was a dollar bull back then, and the dollar was at a dead low, and I was a dollar bull then, and I'm still a dollar bull today.
What do you say to guys that were looking at the Stixie formation at 97.80 being a breakout, and now we're trading underneath the breakout? Because you know, my problem with the dollar here is it's so crowded, and it's been crowded for such a long time, and sentiment numbers are, you know, euro got down to 9 on DSI a week or so ago. So doesn't it bother you? You have a lot of company being bullish the dollar.
It does, but this is what we've seen. Here's a dollar chart on my right side, and here's what we see with the dollar. It pulls back in, and then it gets everybody jittery, and then it goes back up. And when you look at that bigger time frame, which is something I always tell traders to do, look at that bigger time frame, and you'll see that trend just keeps going up. You get those big flash sells on a weekly and monthly chart, and then the dollar recovers and goes to new highs. When you think about it in a bigger picture, just think about, all you need to think about is Europe. Think about Japan. What do those two places have in common? They have negative interest rates. The money has nowhere to flow but right here. Great
point, Nick. You know, we can't let this much time pass between interviews. So how are you going to play it, Nick? Are there any sectors within the market that you feel are most vulnerable? You know, I'm pretty negative oil now, and even though Venezuela, and copper, which is they're both pretty good economic indicators. Or do you think the high-flying tech sector, like the triple Qs, might be the best short because they were the outperformers?
Well, I have crude, talking about crude, I have that going up to $68. So once
we have another rally coming.
One more punch right up to 68. We probably go to 68 and a half. Usually we'll pierce my line by a little bit, and then it springboards back down. So I'm looking for crude to get to 68. That's where I will be looking to short crude. Looking as far as the markets go, if you take a look at a stock like Intel, which I own put options on, and I'm looking for Intel to go down to maybe 44 at the least, and potentially even 36. So I think this is, they came out with earnings.
Right.
The stock's been selling off. You'll get some minor bounces, but select groups inside of technology should get hit pretty hard.
Google has a very ugly weekly chart now, made new all-time highs. Looks like
Absolutely.
a 3 drive to a top and on the weekly.
And you want to know something, Dale? When you get wide range expanded bars from all-time highs, and that's what Google just did, that is a negative setup. That's an M top in the making. So again, Google's just an equity that could go down to 1050. I know people think that these things can't happen, but we all saw what happened in October, November, and December when these markets start to sell.
Especially December.
Yeah, and just think about this, Dale, which a lot of people aren't really talking about too much. As of late, I've been hearing a little bit about it on TV. But look at the volume really throughout 2019 on the spiders. In the month of April, we don't even have a single day where we've traded 100 million shares. So
what a great point.
When the sell side happens, it's going to escalate. It's going to be like taking the elevator down without buttons. It's just going to go straight. So
Intel, basically, Intel is going to be a foreshadowing of what the overall market's going to be. And, Intel looked great. And in one day, the trend was broken. So, it could be event driven where, one day breaks this uptrend in the S&Ps. But to me, it looks like Intel is kind of foreshadowing what could happen to the overall market.
I think it is. I think you have a market right now that has been going up on extremely light volume, and that keeps me bullish. However, when you get that high volume sell day, that's usually the signal that the markets are ready to turn.
How many shares? What would you consider high volume? Like the
high volume
spike we had in
so anything you want to see the spiders go about 120 million shares or more.
Okay.
So when the spiders turn with 120 million shares or more, it's probably a sign that the top is in.
So where do you hide, in the dollar and bonds during this?
You hide in bonds. That's exactly right. You get into bonds. In fact, anybody can do this. If you take a look at the TLT, you had that nice spike up here. It'll probably have one more little downdraft, and then this is going right up to around 134. So, there's money to be made there. If you take a look at the IEF, which is another bond ETF, this is the 7 to 10 year. You've pulled back nicely as expected, and then we could go up to 109. So there's definitely some movement to the upside in bonds. The other way to play it is obviously shorting the S&P or shorting the NASDAQ or shorting any of the diamonds. It really doesn't matter.
How about shorting U.S. dollar yen, which is pretty tightly correlated to yields?
Yeah, I mean, there's possibly a play there, but right now I don't really see this doing much. It's been in such a tight range for now.
Yeah.
I'm a setup guy. I got to really see that chart giving me that real tight setup. So the setup's not there yet, but it certainly could be something.
You know what else you do well, Nick? You get it all said and done quickly and right to the point. So GAN-wise, what are you looking for as far as how long should this scenario play out? You think we go into late summer or the fall?
That's
right. Then see where things shake out for possible values.
That's right.
Things that got cheap.
I think everything will be cheap. I don't know if you were following me back in December, Dale, but I was due again. I got the Christmas low bottom and rode this thing up. We had a little pivot here, which was the equinox. Now I'm looking for a sell in May and go away, and we'll come back in September. See you in September.
Okay. Yeah, Wake Me Up When September Ends was also a pretty good tune. Actually, I want to ask you, that low that we had in mid-March, that was a Bradley date. You have a view on whether or not, do you like the Bradley indicator? Do you use it at all?
I don't use the Bradley just simply because I haven't found it to work more than 50% of the time. So
okay.
That's my only negative. Not to say that some Bradley dates don't really hit a bullseye. They do. But it's just not, you know, I like things that work 70% of the time. If they work 70 or more, I add them to my tool belt. If they don't, I kind of discard them. Every year I'll take a look at the Bradley models. But I kind of just shy away from it because it's just a little bit tough. So, you know, it's hard to pick out which ones will work. But even here, you know, we had that nice little March sell-off. Yeah. We had another little March pullback, but you could see the trend was so strong. Traders should always understand when that trend is strong, you might get some shifts in the current, but the overall current is still going up.
Okay. Anything that you'd like to wrap it with? Any instrument you'd like to wrap it with?
Yeah, I mean, right now, when I look at this market, I just want to tell traders again, just watch that S&P. When you see that thing dip like it did here on March 22nd, and you get a follow-through day, just get prepared. This market's going to be on some real shaky ground. And I know everything looks great right now. The flowers are blooming, but we could have some rainstorms and clouds coming into this market shortly.
Okay, Nick, and the best way for people to follow you, you know, this could be a good time for you to show your website if you'd like, and the best way for people to follow your work, which I think is outstanding. You know what, Nick? I've been bearish crude, but after looking at your, and did okay the last week or so, I'm getting flat after this interview. Thanks for being here today. I am. I'm going to get flat because, you know, maybe if Venezuela does blow, why do I have to be a hero here? You know, I used to always want to be in stuff. A friend of mine said, Dale, you love to hear the ice crack. But you know what? I can't climb out of cracked ice as easily at my age as I could years ago. So I'm just prudence over valor. Thank you, Nick. I think you're going to save me some bucks here. So
thank you, Dale.
Why don't you show your website so people know how to follow you and
pull that right
reach
up.
you? And
so members can come right here.
There's Gareth.
We have a blog out here. Gareth is on the homepage. He's a little bit more handsome than me. And,
come on.
and then you can just come over to our research center. We have options. We have a day trade room that we do every day. It's been on fire in 2019. And so everything's right here. We have all of our everything that we do. So come on over. We got lots of content. You see a little article I wrote on Google, and we put up lots of blog material each and every day. So it's all here. Check it out. And
it looks like you have a 7-day trial. Is that for your room?
Yeah, we have a 7-day free trial to the trading room and also to our research center where you'll get all of my reports. I'm under the daily market report, and my partner Garrett does a separate report in there called the nightly analysis video. So you get all of our setups in there, and you'll also get all of my work.
Okay, Nick, my brother on more than just a trading level. It was great talking to you, and
great to be back, Dale.
May pips right down on you. And all your followers and Gareth, say hi to him for me, and
I will do.
Much success. And hey, let's have a good time. Down is faster.
Yes, let's do that. Have a wonderful week. Have a great trading week. Wish you guys lots of success, and looking to be back soon.
All right, everyone. That's my trading warrior brother, Nicholas Santiago. So you can follow him. What a great presentation. I'm reassessing things, and this is why I do this, okay? I'm selfish. I do it for me, too. It's intelligence gathering, and that's why I spend time bringing good people in so that you have the edge and can consider more than one side of a trade like we do here at ForexAnalytix. So that's a wrap, everyone. Good luck on the Fed, and we'll see you tomorrow. Remember, don't just count your pips, count your blessings. Adios. See you tomorrow. Thanks again, Nick.
Thank you, Dale. Take care.
All right, buddy.